which let's flow right into another thing. Let's see. Well, if we can, like, I had something I want to pull up, but why don't we just pull back a couple weeks, and says market wrap, cryptocurrencies and stocks drop as Russia-Ukraine tensions rise, as I kind of touched on before. We don't necessarily need to go into all this, but and then crypto market capitalization slumps to 1.5 trillion as Russia attacks Ukraine. I don't think we need to go into all the specifics, but we understand when I'm looking at prices, if I didn't see all this, I'd be nervous, like, because prices have been, I mean, prices were already down low in December and January, and they went even lower. And I didn't even think it could get to this point. There's still new higher lows than the last year's. I'm not worried, but I'd be concerned if all this wasn't happening. Honestly, I think this is like a nice, heavy downtrend, or, you know, pulling all markets down. But a lot of people, as of, like, you know, last couple days, cryptos and stocks rise on possibility of Russia-Ukraine talks. Some traders expect the price bounce to be short-lived. And it kind of does show you how fast and how emotional the market can. Oh my gosh, there's a war, there's this, there's that, inflation. All the money comes out, right? The Fed's going to do this. Money comes out. A couple days later, okay, Mel's throwing money back in. Like, it's ridiculous. Like, some of these things already went up a little bit. Now they were down so low that they still seem low, and they're probably going to be low for a while. I still see a couple months, to be honest. But eventually, I think things will be looking pretty good. A lot of good couple months to get some heavy discounts, right? Says Bitcoin and other cryptocurrencies rose on Friday after Russia agreed to negotiate with Ukrainian officials. Putin is ready to send Minsk to a Russian delegation. Kremlin told reporters on Friday. Still, the situation is unstable, especially after Russian forces intensified attacks on Ukraine capital in recent days. Russian president later made comments suggesting that he was not serious about participating in talks. Meanwhile, global markets were in a state of flux as investors tried to make sense of geopolitical moves. The S&P 500 stock rose over 2%, while Russia's ruble ticked higher. Abiet near its weakest level on record. In crypto markets, Bitcoin underperformed most alternate cryptocurrencies altcoins on Friday, suggesting a greater appetite of risk among investors. Bitcoin was roughly flat over the last 24 hours, compared to 5% gain in XRP and 10% in Terra Luna token over the same period. Some investors expect the rebound in crypto prices to continue because of the spike in volatility. Bitcoin's 1 week implied volatility jumped to an annualized 75% on Thursday, topping 1, 2, 3, 6 months gauges, similar to what occurred over the May 2021 crash. Further, Bitcoin's inverted volatility structure typically precedes price bottoms, according to CoinDesk's. Implied volatility refers to investors' expectations for price turbulence over a specific period. Volatility spikes can be short-lived, however, which could delay a significant upswing in Bitcoin spot price. These spikes in spot price would probably be met with aggressive spot selling, capping the top side. QC Capital, a Singapore-based crypto trading firm, wrote in Telegram this week. So it's great that people have a little more confidence. Who knows, with, like, you know, geopolitical wars and all this crazy stuff. I mean, we hear more stuff. Maybe things go down and up and down and up until, I think it might just be a couple of months of us writing all this stuff out. People stop freaking out about everything that, you know, that's what I see. What do you think?
Yeah, man. I really feel like there's, you know, funds, like trade funds or like investors that have a lot of people's money, and they love
This time?
to buy the rumor and sell the news. Like, they're like, they heard the news on this and they sold it hard, you know what I mean? And they sold it And I mean, I don't know what they're doing. Like they could be selling and like taking profits and then reinvesting, you know, their profits, or they're just stockpiling it back in. Like, yo, I just made, you know, out of this 5,000, I have 10,000 before the crash. Now I'm putting this 10,000, you know, in current crash, and I'm gonna, you know, double my initial tokens. You know what I mean? Like they're just increasing their token count, or they're increasing, or they're just taking profits and reinvesting that and trying to get back to that point because they know it's gonna go back eventually.
Yeah.
And it just feels like that. And then like as a, you know, as a hodler, like you're just like, I don't really like. I totally like wrote this money off. Like I'm not even thinking about it. You know what I mean? It's like almost like a 401k status where like I can't even touch it if I wanted to, unless I get penalized.
Especially if you're staking, you're just getting rewards anyways.
Yeah,
Why move it?
yeah. Why
Like,
move it when you're
check it
staking?
in 6 months.
Staking is initially pretty much, you know, we're talking about Bitcoin, which is proof of work, which they mine. They have computers that mine, you know, the transactions in a ledger. Well, staking, you pretty much,
You're showing your good faith to the network.
yeah,
You're getting rewarded.
yeah. Hold on.
Sorry. Sorry. You want to say it? I feel bad. Sorry.
No. So staking. Well, my good friend Alex is gonna go into detail about that because he loves staking. So here we go.
Well, basically, with staking, for a long time, for a little while, when I didn't quite understand it, I thought it was like almost micro mining. Like, oh, I'm getting a little bit of whatever, but really, it's putting your money. Let's say I have, I don't know, $1,000 in Ethereum. It's putting your money on the network and showing a good faith that you're not going to move it, and you have it locked up, right? So some of the ones you actually can't move for anywhere. You have like soft and hard staking where like maybe you can move stuff at any time. Other ones require you to lock up for 21 days. And Ethereum 2.0 is like, oh, you got to lock this up for 2 years, right? So if you want that percentage, like Ethereum's like, depending on where you do it, it's like 4 to like 6.5%. Like you get a passive paid out in more Ethereum, you know? So a lot of these coins will pay you out in their native token, you know? Cardano will give you like more ADA, and Terra Luna will give you more, you know, Luna for whatever you stake them. So it's a really nice way, and we've talked about it a little bit before, but if you don't want to lend your money out and go on DeFi and you can like do all this stuff where you know, set it to a network also, and you like let someone else have it, and you know, you make money on interest of letting you borrow it. And you lend your money, like you can just stake it to the network and make passive return. It might not be the highest, but it's better than nothing if you want to just sit there for a year and like, okay, cool. A lot of it's like very easy 5%, but you can make a lot more. I mean, honestly, I've looked at like Pancake Swap and stuff. They have even like their native tokens. It's like 50-60% just for, you know, but the smaller it is, they only have a market cap of like 2-4 billion. Like, yeah, like it's riskier. I mean, I don't know if $1 billion swap is risky. I don't think it is, you know, that people use every day, but, you know, it's still small. So, but anyways, if you don't look that hard and you just want to stake to a network, or what you can do on Coinbase or whatever is just stake just on there on Kraken. They'll give you, you know, a sweet, easy 4 to 8%, 12%, depending on which one it is. And usually, yeah, there's some that do 12 or 24. Well, they're smaller, they're more risky or whatever. But the big ones, talking about top 10, top 15, will give you like 5, you know, maybe like 8% tops. So anyways, I know a lot about staking because I like it. I do it a little bit. I have a basket of coins that I like to stake. You know, we'll see which one, you know, stick around. I feel like a lot of them do really well. I don't see them disappearing. And if I did, I'd get rid of them. But, you know, you're just getting a sweet passive return until you decide to sell, right? I'm just getting free money. So
Yeah. So the way I look at it is like, okay, staking. It's pretty much a saving account.
set and forget.
Yes. You put your money, your token in a savings account, which is pretty much a node. It's a term for like a group of people that have their tokens in, and then once your tokens are in this node, which is this group of people, you're supporting the decentralized network, and therefore you know, the percentages get broken down and how much you're contributing into the network. So it's pretty much like a savings account. Like say you're like, you know, your bank was like, hey, we have all these people. Like, we're going to give you money based on how much money. We're going to give you interest rates depending on how much money you're saving in our accounts. That's pretty much what it is. And banks don't do that. And they're like, you can have $1 million, you can have $10. We're going to give you that 0.00035. You know what I mean? Like, you're going to get that. And we're going to make, the 99.00 whatever 99 point whatever percent they're going to get out of your money. And that's how banking system works. And that's what crypto, and most people, I would say about 90% of the people, don't understand about crypto. Is like, it's literally your money at work, and your money's working with other people's money to make money. Yep. And that's all it is.
Finance is running it for right now for crypto.
Yeah.
But there'll be other things.
Yeah. Like I was saying in like previous podcasts, like one of the first podcasts we had was, I wasn't around when the banking system was created for me to invest in the banking system, but we have the cryptocurrency, which is pretty much a banking system, but in a democratic way. Yeah. And I'm in it. You know what I mean? I'm down. I'm like, if I was, I'm staking some money. But what I'm saying is, if there was a way to invest in banks back, if they would let you invest in banks back when, Wells Fargo and all these banks were back in the day in the 1800s, like, I would have, you know what I mean? And I would probably be like a Rockefeller or something like that, hanging out, making money, but can't. So, I wasn't around that time. So now we're doing this. We're doing the crypto thing. You know what I mean? And it's pretty much simple. Simply put, it's a savings account. Group of people put money into it. They break it up in percentages, and you get money way more than what a bank will give you. We're talking about 20% on average, depending on where you're at. On average. Depends. Okay, right. Depends on what token you're in.
How deep you want to get in DeFi? The you can get.
Yeah. In reality, it's like, it's all risk management too. Like, you just can't, like, if you want to be safe with your money and you're like, hey, this is all the money I have for my life savings. I don't want to lose it. I want to invest in it. I want to stake because I want to get more money than what my bank's giving me, but I don't want to lose it.
Do something less risky.
Yeah, I would definitely look into a platform staking, because they kind of mediate the scamming and the wrongdoing.
Slashing also.
Yeah, and all that. Yeah, that's when they just turn off a node, right? And they're just like,
you get penalized.
What?
So let's say if I'm delegating, because a lot of people can't buy 32 Ethereum or 36 Avalanche because it's thousands of dollars. It's tens of thousands of dollars at this point, depending on which one you're looking at. Yeah, at least tens of thousands. So what happens though, let's say I delegate to Leo's Ethereum platform, his Terra Luna, whatever, and I only have 3 to 5 and you need 30, right? So I give it to him to run his node. I'm lending it out to him. I still, a lot of the cases, it's still in my wallet. It's just proof that I have it. I give it to him, whatever, done, right? It's in a smart contract. There's nothing fishy going on here, but let's say his node goes down for too long. Like, they have an acceptable tolerance. Like, let's say it goes down for 30% of the time. All of a sudden they will, I know in the case of Ethereum, it varies for every crypto, right? They'll actually do slashing. Well, they will actually cut not only some of your return, but they'll take some of your crypto, be like they're penalizing the node operator for being not having his node running because he can't support decentralization. You can't run the network. Well, you're not going to get paid, but we're actually going to take something from you. So if you run it on a centralized, like a coin exchange or whatever, a lot of them will protect you from that, like Kraken or Binance. Sorry. Well, Binance has more, depending on where you are in the world. US doesn't have a ton of options. It's hot. Yeah.
I'm a dragon.
Yeah. Kraken also, so they will do it for you and they'll protect you. They have insurance for slashing, so that's kind of nice. So you don't have to worry about all that stuff. So I was just going to touch on that. The other thing that I kind of wanted to throw out there is we were talking about he was talking earlier that let's say some investment firm or person that has a lot of money sells high and buys back in low because he just wants to make all his people a lot of money, right? Well, that's the case. I think that's definitely the case. But one thing that I think about is I've looked at websites that break down like a crypto, right? You know, you look at Ethereum, you look at Cardano, Avalanche, Luna, because those are the ones I just picked out today. And you look at how much was actually given to like the angel investors and the people that, you know, worked on the project and all this stuff. And some of them are like 40 or 60% initially they gave to them. And then the rest of it was public. So you got to think these people that have a majority, I mean, half is a lot of your crypto. I mean, if I didn't know any better, I would have said that's like really sketchy. The only other argument that I see for that is that some of these people that invest heavily is because they really believe in it. So they're the ones there and they develop this thing for you so you can invest in the first place. So they kind of have, you know, first dibs on, market share, right? Because they understand the awesome thing they made, which honestly, some of them are really, really cool and can do so many things, right? Like I opened the Terra wallet and I'm blown away. Like there's so many options and it's so easy and it looks so clean and it's really nice. I really like it. But they also have, like a high percentage of like all went to like initial investors. I think it's like over 50%. So yeah, I think some of them are just going to dump if they see the market like going, if it's really high, like it's only in like the $50, $60 mark right now. When it went to 100, of course, some of them sold off. Like, why wouldn't you? But I think the only reason they sell off also, I never thought about this, is that they know that it has such strong fundamentals. It's going to go back up anyways. Oh, yeah. Like, yeah, some of these projects, and where you're like, I'm like, oh my gosh, like I can't believe I bought any of this at under $100. It's a deal, like it's crazy technology that I think a lot of people can't even appreciate yet. So I'm blown away. I feel lucky I'm here, honestly. Very strong fundamentals. When you talk about global infrastructure and people using it. So I think that's another big thing that a lot of people don't really factor until you like start looking into this stuff more and more is, all these people that had most of the market, at least a couple of years ago when it was initially created, they've been slowly, selling back in the market too. So it's part of it. Doesn't really get talked about a lot, but in the next couple of years, once a majority of theirs is sold off, honestly, probably stuff might even go a lot higher. So any thoughts on that?
Yeah. So everything we talk about, smart. Yeah, I mean, Alex is very smart. You know what I mean? Jesus, this man's trying. This man's trying to kill me. No. He's trying to kill me. I thought the same thing. Yeah, it's funny. What we were talking about right now, I know. So everything we talk about is like, we're not just making this up or we read it in some article or anything like that. We're talking about firsthand experience. Like we've experienced, Alex has staked, I've staked, we've seen it firsthand. And that's why we're so like, meticulous and like detailed oriented when we talk about this, because we've seen it firsthand experience. It's like your first time ever investing in a stock or crypto. You can look at the trends because it's at your attention, and that's our attention right now. The staking is our attention, and we're like, okay, there's this guy that has like over $100,000 worth of coins, and I'm in his node, and I'm like, okay, he's getting like over 40%, and I'm getting 1%. Like,
it's allocated.
Yeah, it's obviously it's like, it's allocated how much you put in, and I understand that, but I'm just saying, like, damn, like, how does he get to that level? You know what I mean? Was he just a strong believer and bought into that, or was he one of the developers who's like, the only way this is gonna work is if we have 20, 30 nodes, and each node has $100,000 worth of it. And guess what? We IPO'd, we made our money. Now it's time to put back into the community and make it grow by showing people that there's people that have over $100,000 in a node that are willing to invest. Now come on and join. And, and then later on, once we have like 100, for $1. Yeah, exactly. $1, even, I hope $1, you know what I mean? Like sometimes it's like, pennies to the dollar, but anyways, I don't want to get like depressed thinking about that, but like, right. But what I'm saying is like they deserve it because they developed it, or they're a part of the program way before anybody believed in them. They saw the potential. They saw the potential, and, right. and they're actually working towards making it something, because like most of this stuff, like 90% of these coins don't have use case. You know what I mean? It's all a promise. Anyways. That's all I wanted to say was like, these staking, once you get into staking, you're going down that rabbit hole, because there's like tons of rabbit holes to go through. But once you go through the staking rabbit hole, you'll see that, and do your due diligence, do your homework, go online, figure it out, do what you got to do, invest a little at a time. Don't diversify. Don't go, don't go 100 on one thing, because you might get burned. That's luckily we haven't done that yet. We haven't gone 100 on something and got burned.
I don't think we will at this point. I think
we won't. We won't go 100 on something and get burned. We're gonna
follow.
Yeah. We'll lead you through it. Walk the path, or go through the rabbit hole with us. So yeah, we pretty much put a little bit at a time, and we watch the nodes, and we see what's going on, and we see our growth in the node. And then once we see good potential, then yeah, we might make another move. But besides that, if something does happen, we're like, hey, it was in a position where like it doesn't really bother me, you know what I mean? Like, it doesn't bother me. Like, it's a
check up on it.
Yeah, I mean, it's a good story, they're gonna be a good story, but I mean, it doesn't really bother us if something would go south or something like that. But yeah, that's all I wanted to say was like, we're not like making this up. We're just like explaining our process of our experience in staking.
All I can say about that is doing research and doing crazy stuff. Yeah. If you want to find a good, node delegator, whatever, they usually have their own websites a lot. Once again, the caveat here is every crypto is a little bit different. So once you start to actually, do it, you can see what you need to look at, but there might be websites that they show their uptime, they show this, they show that. You see if they're verified on Twitter and reputable and everything. So it's just, the more research you do in that sense, even if it doesn't take you that long, like, cool, this is a good node, great, like, done. I actually wanted to get some free airdrops like recently. So I looked up 200 different nodes one night. I sat down and I had a wallet open, and then I had another web browser, and I was just like, okay, cool. What's that one? What's the percentage? What's the saturation? What's this? What's that? What am I going to get back on my coins? Like, I went crazy. Like, it's just so funny. You can go down that rabbit hole, man. Like, it's wild. Like, I'm like, did I just actually do that? But I got the best return for my money. I swapped some stuff around. So, that to say, I didn't have to do that. I could have just like, oh, this one looks fine. I was like, you know what? I'm here. Let me just do it really quick. Yeah, I counted it because I was like, I just did a lot. It was 200 different. Oh my gosh. So it was fun. It's done. It only took like a little bit of time. And, that's why we're a little bit of crypto whizzes. Maybe we're not like the most amazing and don't know everything, but we know some things by now. So hopefully you have a fun time listening to us. And I think that's going to be the end of this one.
Yep. That's it, guys. It was fun talking about was it Bitcoin, its potential, inflation, Russia trying to monopolize mining now because they're trying to fuel their war efforts. I'm just kidding. That's probably not true, but they have enough money. So. They're not trying to fuel their war efforts. They're just trying to take a bite out of this whole crypto drive. Whatever vessel you want to get on to get there, they want to take a piece of that. They want to be the toll road and be like, yeah, you got to pay the toll.
Yeah. So hopefully you enjoyed the Elijah Craig barrel strength review. Apparently we're going to start this one in a new video. So there you go. Have a good one. Signing out.